Thank you for tuning into the Equity Channel, where we provide the highest quality stock market analysis to individual investors. Our goal is to help you improve your returns by keeping you up to date with everything you need to know. What helps investors beat the market is information and knowledge of how to use it. We'll provide you with both. Before we get started, be sure that you subscribe and turn on your notifications, because every time we drop a new episode, money is made. Today, we're doing the ultimate value investing episode with a focus on stocks that are priced for no growth, but definitely showing growth potential. Each company in this episode is a leader in their field, but the current market environment has led to a mispricing of their stock, leaving room for double-digit returns in the future. Each of these stocks has positive projections for growth over the next 5 years and are trading at a margin of safety. As usual, we only focus on stocks that score highly on the Equity Channel's index valuation, which means they show that they have the ability to pay off their debt, that they're in a financially stable position, that they have a competitive edge, and that they have a reasonable future outlook. We're not going to list these stocks in any particular order. Investors should weigh their interest in the company by what they need in their portfolio. All three of these names are defensive plays, with 2 in healthcare and 1 in consumer staples. First on the list is Lamb Weston, ticker symbol LW. On their latest earnings report, Lamb Weston kicked off the new year celebrating a solid quarter marked by record sales. They are one of the largest frozen potato product sellers in the world. Their top customers include McDonald's, KFC, Taco Bell, and Pizza Hut. The company scored a 79% on the Equity Channel's index valuation, needing to improve their F-score and free cash flow yield. Nonetheless, I believe this is a definite buying opportunity. Our average target being $124 per share, and the average analyst target being $129, which is over 50% above the price that we're trading at today. Next on the list is Gilead Sciences, ticker symbol GILD. For those unfamiliar with the company, Gilead develops drugs for various diseases. They are a leading player in the treatment of HIV, hepatitis, and influenza. They control 70% of the U.S. market for HIV treatment. The company is currently priced well below growth value, but projected to have solid growth over the next 5 years. They're currently trading more than 20% below fair value and the average analyst target, providing a sufficient margin of safety. They scored an 86% on our Equity Channel index valuation. The company shows a healthy and sustainable growth trajectory and has a great free cash flow yield with a solid 4% dividend payout. Last but not least is Royalty Pharma, ticker symbol RPRX. This is actually one of my favorite companies. They operate in the healthcare sector, but with a unique niche called royalty financing. They don't manufacture the drugs. Instead, they invest in approved drugs by providing upfront capital to pharmaceutical and biotech companies funding their research. In return, they receive royalties on the future sales of those drugs. They are one of the largest in their field. In fact, this company has funded research at just about every pharma and biotech company you know. This is one of the reasons I like them so much. Their income is dependent on pretty much the entire healthcare system continuing to function. Quarter over quarter, earnings are up over 200%, while year over year, earnings are up 2,150%. They show more potential for growth right now than for most technology companies. Institutions are buying over the past 90 days, and their free cash flow yield suggests they will be able to continue to deliver growing returns to their investors. Royalty Pharma scores a 93% on the Equity Channel index valuation, making it the highest scoring company amongst this group. The Equity Channel is one of the most followed stock market podcasts for beginners, a valuable resource for investors who are looking for information on the stock market and the economy. We love to make our episodes quick, straight to the point, and rich in value. We hope that's what you got today. Be sure that you subscribe, turn on your notifications, because every time we drop a new episode, money is made.